Hello, guys. So, in this session, we are going to discuss a detailed intraday trading plan for your success in trading. Okay, so how to become a profitable trader. So, with this, you will be able to understand some very important concept, and the framework actually covers post-market analysis, pre-market preparation, risk management, execution strategies, and the screen management for consistent results. So, let's get started. So let's start with post-market analysis. So that start from 3:30 onwards. So the trading day doesn't end at market close at 3:30. It's actually the starting point for next day's preparation. So post-market analysis basically ensures learning from mistakes of today, and you won't repeat that tomorrow. And also it will help you to recognize the market trends and understand the market trends. So first thing that you need to do is you need to maintain a trading journal. So whether you are a beginner, even now, my even the experienced friends that I have, they maintain the journal, and that too in writing. They do it so that it will be there in their mind any point of time. Record whether the trades followed your planned strategy or you actually deviated due to impulsive behavior. If you have a strategy, you stick to that strategy and followed that, or at some point of time you deviated and you went for impulsive behavior. Again, you also need to note down whether the losses are within your calculated risk, or is the loss happened due to unexpected market movements which you couldn't control. You also need to evaluate the impact of news. Okay, how the market have moved because of news or various SEBI regulations, or expiry days on market behavior. So all these things you can write down. So when you keep writing it again and again, the thing is that things will be printed in your mind and mistakes won't repeat. So the chances of reducing mistake will be very less. Always review the key points. That's again very important. So confirm always if losses align with predefined risk levels. So you don't want to worry about, people are very much worried about trading because they don't know whether they will lose the capital. No, if you are very clear about your stop loss, before you enter the trade itself, you know that this is what you're going to lose and this is what I'm going to get. So if you planned your losses, then you know that this is expected. Then you don't want to worry and you can confidently take a trade. Again, there are various unexpected factors, right? So document all unusual events or market reactions to prepare for similar occurrences in future. So that is again very important. Again, various behavior pattern. See, identify repeated errors or missed opportunities for improvement. There are common behaviors. It will be repeated in the market. There is a very famous saying, history repeat. So previously, if you see some pattern or behavior, when it comes to the next such situation, don't miss that opportunity or don't get trapped in that situation. Okay, back testing is again very important. Take your strategies using data from the day, trading day. So try to back test the strategy. Even if it is a simple strategy that you're following, a 20 moving average strategy, still you need to have that back tested result with you. Don't blindly follow that. Okay, again, avoid planning specific trades for the next day to eliminate biases and emotional trading. When you're planning that this specific trade, then what will happen is there can be bias. So you may miss a very good opportunity also depending upon the price action. And that can again lead to emotional trading. So that's something which you need to avoid. So these are things that you need to do post market. Let's look at the pre-market planning. So once after the trading hours at 3:30, once the market closed, you will do post-market analysis for 1 hour. You will analyze all these things. You will write down these things and everything. And then before the market start, also you will be spending 1 hour. See, during market time, you won't get time to analyze. Emotions will be at its peak, right? So before market 1 hour, after market 1 hour, this is going to give you a proper understanding of the market. You will realize the real trend of the market. You will be able to understand the market at this point of time. So at this point of time, before market, 8 o'clock, you come sit in front of the system and you make a trading plan. Preparation is the cornerstone of successful intraday trading. Start each day by building a comprehensive trade plan. You sit with your system at 8 o'clock, make a plan. So when I teach, when I mentor the students in the live market, I have a plan. I discuss that at 9 o'clock when we start. We discuss the plan because that plan has been made previous day post market analysis. This day, 8 o'clock to 9 o'clock, sitting in front of the system, analyzing everything, making a plan and giving it to students at 9 o'clock. And then we start the live session at 9:15, 9 o'clock onwards. So that's how it worked, and that's how it is working, and that's how you need to do. So, market analysis. So, various pre-market indicators, which include the global market. You need to look at the GDR, ADR, how is it performing? You need to look at US market, Dow, how is it doing, Nasdaq, and US market mainly. When I talk about global market, you need to look at Dow, DAX. Okay, again, various Asian markets. Okay, Nikkei you need to look at, Hang Seng you need to look at. So these are various pre-market indicators, how Gift Nifty is trading. So all these will give you an idea how market will open. And based on that, you can plan the trades. Identify the key support resistance levels, various tops and bottoms. You can see, you can use CPR levels. You can also use previous swing high, swing low levels. You can use Fibonacci retracement levels. By using these, you can create that support resistance levels that should be there with you. This is a key support, this is a key resistance, and that you need to have like preliminary, primary support, secondary support, tertiary support, like that, as you see in case of pivot points R1, R2, R3. So you need to have that like intraday support, long month, like daily support, weekly support, monthly support. Anticipate scenarios of gap up or gap down or flat opening, and prepare contingency plan and prepare your trades accordingly. How can you anticipate? Once you have very clear idea about the pre-market indications, from there you will be able to know whether it is going to gap up or gap down, or is it going to be flat. So you need to make a plan. If the market is opening flat, this is how I do. If the market is gap up, this is what I'm going to do. If the market is gap down, this is what I'm going to do. So that plan should be there. Planning to trade is actually very important, and only try to execute that plan. Okay, so again, always try to set that risk parameters. Define your risk per trade. Set stop loss levels based on your trading strategy. So looking at the risk reward, what strategy that you follow. I'm not discussing about this. You might be following a strategy. It could be a VWAP super trend crossover, or it could be simply an EMI crossover, or it could be based on RSI, or it could be based on MACD. Whatever strategy that you follow, you know the risk reward, and based on that, you need to fix your risk per trade. Define risk per day also. So two things that you need to do: risk per trade, risk per day. Can't keep on trading to recover the losses. Maybe 2-3 trades is what you can take on an average. Okay, so allocate 1 or 2% of your capital as daily risk. For example, if you have 1 crore capital, your risk will be 1 or 2 lakhs. Or if your capital is 1 lakh, then your risk will be 2,000 or two. When the capital is less, you cannot take the same risk, right? So when the capital is less, sometimes you may have to take more risk. Like if it is 1 lakh, you may have to go with maybe 3-4%, because actual numbers will be less. When you scale up, that's when the numbers have to come down. Okay, so for profits from the prior week, consider risking a portion of maximum return that you have got. That's another strategy that you can follow. So normally what I used to follow is previous day profit. That's my risk for this day. Okay, so risk per day will be, what is my previous day profit? That's the risk this day. And if you see this day I lost, then I'll go for 1 or 2%. That's what you'll be taking it. Okay, so now stock selection again. See, select, if you are trading in stocks aggressively, select 6 to 8 stocks or instruments based on the technical analysis or the news, and create that list for the day. So for that, you can use various tools which are available in the market. That way you can do. Again, now coming to the execution and the risk management part. See, guys, we have directional trading, you have option buying, you have option selling. Within option selling itself, we have directional option selling, we have non-directional option selling. So you need to plan accordingly whether you want to go directional or non-directional. So plan to take up to 3 attempts, or at a directional trade. You can set stop losses each time. So that's something which you can do max. If you're going directional, uh 3 times you can try for a trade and then keep the stop losses. If all 3 attempts fail, close trading for the day to limit the losses. Your per day risk might have touched at that point of time. See, when we talk about directional trade, What you need to do is you will look for chart patterns, identify breakout or pullback opportunities. Once the breakout is confirmed, don't try to enter immediately on that direction. Wait for retracement. The advantage is your stop loss will be less in that case. So the breakout is there. You wait for retracement instead of entering right at the breakout. The thing is that your stop loss will be that bigger candle. Wait for retracement, something like 20 EMA or even at least 9 EMA retracement if you get, then that will give you a good entry with a very limited stop loss. Sometimes you may miss the trade, but that's okay. There is no need to chase from that breakout point. That's again very important. If you are looking for directional trading, then market levels, you can use Fibonacci retracement or historical levels to identify entry and exit points. Once you identify a monthly support or a weekly support, it's a strong support or resistance, then you can look for reverse trades also from there. When it comes to option selling, always focus risk per day, as this strategy often involves hedging. We normally do hedging, so risk per day. Hedge positions to limit losses and maximize safety. If you are an option seller, you need to have proper hedges so that your safety is no problem. And use market sentiment and volatility analysis to decide on, put call ratios also. So that all things that you need to look for when it comes to option selling. Position sizing is again very important. So once you know that what is your risk per trade, based on that, you need to allocate the capital for each trade. So risk only 1 to 2% of your total capital on each trade. Okay. So for profits, consider risking 50% of gains to grow your account. Like, if you made 10 lakh profit, then 5 lakh could be the risk allocation, something like that you can consider. So that way, again, you can improve that risk reward ratio and can manage the risk also. Now, coming to the screen management part, right? When it comes to intraday trading, you are sitting in front of the system for all the time. Efficient screen management is very crucial for monitoring multiple positions and reacting quickly to make changes according to the market behavior. So, see, it's very important you can use multi-window setup to track selected stocks simultaneously. For example, if you're trading Bank Nifty, you need to know the movement of HDFC, ICICI, and SBI especially, right? And monitor these momentum and execute trade based on the predefined levels. So that's something which you can do. And when it comes to option trading, again, use platforms which offer different, modes. Like there are various platforms which give you clear idea about open interest data, how these ratios and rates are changing and everything. So, and there could be one system where you will monitor the open position and adjust based on the market moves and everything. So these are things that again you need to look at during the market condition. We need to see the charts of the index that you're trading. We need to see the options movement when we are trading the call option and the put option. And if the markets are volatile, switch strategies from directional trading to option buying. Right. So maybe if the market is volatile, the premium move will be faster. So option buying will give you better opportunities. And use live market data, make real-time adjustment based on the available data from the internet itself. Everything is available. So again, always try to learn from mistake and learn various patterns and performance. For that, analyzing historical data and performance, that will significantly enhance your trading efficiency. Identify patterns, find days or situations when trades are consistently profitable or loss making. For example, Thursday or Wednesday, on expiry day, you are making losses or wiping out, then avoid trading that day. If that is a pattern, if that's what actually happening, you're making profits all other day, and on expiry day you're wiping it out, then there is no point. Just avoid trading on that day. So adjust your strategies also accordingly, such as avoiding aggressive trades. At least take 1 or 2 small trades if you still want to trade and be in the market, right? Because it has been proved historically that these are loss making days for you, so avoid that. Okay, so again, analyze the market behavior. Track how the market reacts to news, expiry days, and to specific events like RBI policy day, budget days, and everything. Document your observation in your trading journal. That will refine and fine tune your future strategies, and it will also act as a reference for you in your future. So, guys, the key takeaway for long term success, first thing, consistency. That's the key. Follow your plan strictly. You might have taken course and understood things from one mentor. Follow that mentor, follow the same strategy, and refine, tune that strategy to, your convenience. Avoid any impulsive decisions. Maintain discipline even on loss making days. Try to reduce the loss. You might be in loss, but try to reduce the loss. Try to leverage technology. There are a lot of tools now for trading journal. You don't want to write down, but writing is different, way altogether. That give you a different feel also. If not, you can follow various tools which are available, right? And various advanced charting pattern for better decision making, various tools for understanding open interest data and everything. If possible, you can automate the aspects like stock selection, risk allocations, etc. Control your emotions. So always try to avoid revenge trading or overconfidence after wins. So stick to your predefined risk and reward criteria always. Again, always try to learn from mistakes and try to adapt. Constantly refine your strategy based on the journal insights. That's why you are writing every day. So based on that, you refine your strategy. Stay updated with market news and regulatory changes always. So if you are in the market, and if that is your long-term plan, and if that is your future, this is something which you cannot ignore. So my point is, intraday trading is not just about taking trades during market hours, coming at 9:15 and start opening your system, and then by 3:30 it's over. In between, you take some trades. No, it involves careful planning, disciplined execution, and consistent post-market analysis, and also pre-market preparation. So by following the detailed plan that I have discussed, you as a trader can minimize the risk, maximize the profit, and improve your long-term success. So guys, I feel that this video is insightful and useful and thoughtful for all of you. If you feel like it have given some knowledge to you, you can share with your fellow friends who are also in trading. So that's about this session. Thank you so much. In case if you are looking for any mentorship, you can get in touch with me. Thank you guys. Thank you so much.